It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, March the 29th, 2016, cruising our way through the last few drops of this third month of the year 2016. Don't forget, you've got the April Fool's Day coming right around the corner. We got non-farms, April 1st, right around the corner here. We'll start talking about that a little bit later on in the week. We have another exciting newsletter in store for you guys and gals tonight. We got crude, S&P, gold, and euro. Crude is bullish ahead of inventory news tomorrow, and a new bull channel tells us to use rotation for the most reliable trading opportunities going into the inventory report tomorrow. Even the S&P is quite bullish. Boy, Janet Yellen really got that market pushing higher. We get a completed measured move, 3 legs higher today, which tells us the most reliable opportunities are going to come after a 2-legged correction back to support levels below tomorrow. Got a really interesting plan for both crude and the S&P tomorrow. Moving on to gold, the yellow metal is bullish with a double overshoot of the channel highs, which tells us that although this price may push higher, the most reliable trading opportunities will come back at the channel lows tomorrow. Got a good plan for gold. How about the euro? We'll wrap up tonight with the 6E, the euro currency futures. They're bullish as well with a massive overshoot of the channel highs that turned into a spike in channel, which tells us exactly where to look for a pullback and the next leg higher tomorrow. Boy, oh boy, that euro reacted strong. I assume, right, coming off a weak dollar after hearing what came out of Janet Yellen's mouth this morning. Before we jump into our charts and put together some plans for tomorrow, I do want to remind you guys the only place to watch the full-length version of this nightly newsletter is right on our trading blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, that's wonderful. Make sure you subscribe to the YouTube channel, but the only place to find the full-length version of this newsletter is on our blog. There's a link in the description of the YouTube video. Follow that and come join me over here at sidewaysmarkets.com. While you're watching the video tonight, make sure you join the trade room on a free pass. If you're not a member here at School of Trade, grab a free pass to attend the trade room in the upper left-hand corner. In the lower left-hand corner, I will encourage you to register as a member of our nightly newsletter mailing list. All I need is your name, your email address, and then make sure you check your inbox because I'm going to send you a verification email. Then you'll never have to miss another newsletter ever again. Promise you no spam, no junk in that mailbox. Every evening I'll send you an email when that newsletter is ready to be watched. Also, right below the video tonight, you can find a link to download all the charts that you'll see me using in tonight's video. Nice and easy, so you're ready for tomorrow's trading session. And over on the right-hand side, I'll remind you that you can join our trial membership. You can also register for this on our website at schooloftrade.com, where you can learn more about the different strategies we use here at School of Trade. If you got any questions, we always have someone standing by. We've got live support available 24/7, 365 if you have any questions along the way. As you know, we got a big week here ahead of us. We got only a few days left of the month of March. We heard from Janet Yellen today, and tomorrow is probably going to be a lot of reaction, right, from what she said today. Basically, Janet Yellen, she came out and in a matter of speaking, basically said there's some global turmoil out there. We are going to be cautious about raising rates. She definitely backed off, right, that next meeting in the month of April for any possibility for raising rates. She said they're ready to raise rates, but she made it sound like there was very little likelihood we're going to get at the next meeting. And then, boy, the way it sounded, she sounded very dovish, and of course, meaning most likely not going to get an interest rate hike, and that, of course, why the dollar sank, and of course, why the S&P took off, gold took off, euro took off, and we're assuming that pending any inventory report tomorrow, we assume that crude is going to be the laggard, right, following up there tomorrow as well. So all markets bullish across the board on the back of Janet Yellen's commentary this morning at 11 o'clock. We talked about that last night in the newsletter. We knew that was going to be a big factor today, and it definitely was. Looking forward to tomorrow, though. Wednesday, March the 30th, we've got the ADP employment report at 8:15 and the petroleum status report at 10:30 a.m. That ADP employment report, although it sounds like a really big deal, it's not going to have too much of an impact tomorrow. It will, though, have a direct impact, right, as the week progresses and we go into that employment number on Friday morning. Non-farm payrolls on Friday. What will happen is once we see that ADP employment report tomorrow morning at 8:15, all the analysts now will update their numbers pass those on to the managers. The managers will give them to all the traders, and the traders will soon start to, make small adjustments into their positions, into their risk, into their management of their positions, and of course ahead of the employment situation on Friday. The key tomorrow is that news that comes out at 8:15. You're probably not going to see a big impact tomorrow, but you will start seeing it play into the fact, right, Thursday and of course Friday morning. It'll be used as a leading indicator, a leading number ahead of Friday morning's employment number. So not expected to see too much reaction tomorrow morning at 8:15, but we do know that's going to start playing into it right as we go into Friday's news report. We'll talk more about Friday's news as we get closer to that time. The big news tomorrow, especially for inventory or for crude oil traders, is going to be the inventory report. Now, don't forget the inventory report. This is kind of the hiccup every week for crude traders. Crude's an excellent market. It gives us tons of tradable opportunities every week. One of my favorite markets on the planet. But every Wednesday at 10:30 a.m., it's gambling. And so we have to be careful trading around that news tomorrow. I always tell my students after 10:15 a.m. Eastern time tomorrow, right, it's gambling on crude oil. And it usually gets pretty whippy, low volume, I shouldn't say low volume, but high volatility, low liquidity. And that's the dangerous part about big news events tomorrow. If you want my opinion, after 10:15, a lot of traders don't even go after 10 o'clock on Wednesday mornings. After 10:15, if you're day trading crude oil, back off. I recommend kick the feet up on the desk, watch and learn. The hard part about it is that a lot of new traders get wrapped into trading the news. Remember, you can't practice on a simulated account, right, when there's news events. Why? Because the volatility increases so much, there's very little liquidity, and you're not going to be able to feel that on a simulated account. We teach all of our students how to trade around the news here at School of Trade. Minor news events, we're going 5 minutes before and 5 minutes after, but tomorrow is a major market moving event for crude oil traders, of course. Won't be so big of a deal for gold, euro, or the S&P, but we know that crude traders tomorrow sitting on hands after 10:15 a.m. We typically don't trade after that news report comes out, but if you want to do a little bit of gambling tomorrow, I recommend holding off until 10:45. Again, if you want my opinion, everything is gambling after 10:15 on Wednesday mornings. Trust me, crude's a great market, but Wednesday mornings after 10:15, this is a time when you've got big risk takers in the market, high volatility, low liquidity. It's a recipe for disaster, especially for a new trader that doesn't know how to prepare for the psychology that comes around those news events. We'll be trading this market live in real time tomorrow, so come and join us in the trade room, and we'll show you guys how we do it tomorrow morning around the inventory report. That's all we get tomorrow morning on the calendar. Again, I would expect tomorrow morning to be a lot of reaction to what Miss Yellen talked about today. Pretty much putting the raising of interest rates on the back burner. The way she made it sound, it may not be until after June, right, that we see another rate hike. Although she did make a comment that she was willing and able, right, to hike those rates up if the numbers do as the data warrants. We'll see what happens in the future. Now, as we always remind all of our students here at School of Trade, we trade what we see, not what we think. And of course, we'll get started here with our charts, trading exactly what the charts tell us tonight. Crude oil, bullish ahead of inventory news tomorrow. Boy, that collapse off those highs from yesterday. What a brilliant bearish wedge in last night's newsletter. The sellers got exactly what they want. We talked about that last night in the newsletter last night. What a great example from last night's newsletter of a bearish wedge. We got that complete measured move down. My number from last night was 38.33. As you can see, we're right down below that 38, even then popping right back higher here. So a discounted price for the buyers right now on crude oil. We're bullish ahead of inventory news tomorrow, and a new bull channel tells us to use rotation for the most reliable trading opportunities. We have a spike in channel down, a trading range, a bull channel, and the API support level to work with this evening. The spike in channel sent prices tumbling lower this morning, and we know that spike in channels love to correct back to the base of a channel, which will make for an excellent target for the buyers tomorrow. Here's your spike in channel down, spike down, channel down. There's your spike in channel. Make that a little bit smaller there. And we know the spike in channel gives us a spike in channel correction zone. Now, don't forget, we teach all of the stuff about spike in channels, ranges. All this is taught in our intermediate course. And then, of course, we put it together in strategies in the advanced course, and we trade it every day together in our trade room. If you're a member of mine, right, if a student here at School of Trade, make sure you log into your course materials and brush up on those spike in channels. Bottom line is, spike in channels are very strong trend patterns, but we know they're going to want to correct back to the base of the channel, and that correction zone is going to put us right around 39 to 39.20. That's going to make for an excellent target on the way back up tomorrow. Next piece of this puzzle, the bull channel. The bull channel tells us to expect rotation from low up to high, and the best trades will come buying the lows of the channel. Second piece of this puzzle, we have a bull channel on the chart this evening. This channel, of course, tells us channel rotation from the low up to the high, down to that low, back up to that high, right? And then, of course, back down to that low. In a bullish environment, we want to buy the low of a bull channel and take profit at the high of the bull channel, right? Next up here, we have the trading range. This trading range is a little bit ugly. It's not the best range I've ever seen. We do have a flat moving average. We've got rotation from the low up to that high, back down to that low, back up to that high, and you'll notice here we failed to rotate. Now don't forget, remember you guys can log into the intermediate course and learn more about ranges. What do we know about ranges? Rotation, right? High to low to high, high to low to high. But what about when it fails? It's going to get attacked, right? And we know that when it fails, well, bottom line is we're going to give those sellers 2 attempts. There's your first attempt. Right? Second attempt to rotate down to that 38.07. If they can't get the job finished down to 38.07, where's it going to go? It's going to go hunting for that next range expansion at 38.97. So now combine that with the spike in channel correction zone, combine that with the trading range. Sellers try once, they try twice. If they can't get down to that 38.07, 38.97 is going to be your immediate target right overhead. Buyers will be looking for bear traps using the lows of that trading range as well. So bottom line is if it does go lower, bear trap at the low, right, and right back up. We'll talk about that in further detail in just a moment. The API report this evening gives us the final key piece of information tonight. We get a key level of support here on the chart tonight at 38.21, right? 38.21. That really is where you really want to be looking for those buys tomorrow. Let's play that game. What if price goes higher? What if price goes lower? We have a spike in channel, right, with a correction zone back above. We have a bull channel looking for rotation to the highs and back to the lows, right, to buy those lows. We have a trading range, expecting to see rotation back down to that low at 38.07. If it can't get to that 38.07, where's it going? It's going up to the next range expansion at 38.97. As you can also see here, we have a measured move overhead, right, acting as resistance. I tossed that on here because it is important to notice that lines up right at the high of that channel. Now, what if price goes higher? What if price goes lower? If price goes higher, we really have a difficult time with this market because we don't want to buy high. The ideal scenario if price goes higher is to wait for it now to rotate back to the low so I can buy the low, right, of that channel. Okay, so if it pushes higher here, it's going to be a challenging environment to want to buy this expensive, right? It's an expensive market right now. If it does push higher and you want to be a little aggressive, the most reliable way to do it would be to look for a pullback. But rather than buying the pullback, wait for sellers to try to sell it, right, on their own pullback, and then, of course, failure into strength and continuation, right, and then continuation back up to the high. You're going to hear me talk about this quite a bit, right, looking for failures, in other words, and this can be applied to a micro time frame, a major time frame. Let's say the market is bullish, right? Let's say we have a bullish market. Most of these markets are bullish right now. In a bullish environment, this is what the cycle or the kind of the situation will develop into. We have a pullback into seller failure. Sellers will try to sell that, right, that retracement. That will turn into a failure, which should produce strength. That strength produces pullbacks or continuations, and the target is back at the high. Okay, so one more time here. We have a bullish market, right? We don't want to buy the high. We don't want to pay a premium price, right? Although sometimes price keeps going without us, and you know what? That's part of trading. Welcome to trading. Welcome to life, right? Sometimes life does not give us what we want right now, and it makes us feel like we're missing out. I'll tell you right now, though, the most expensive habit for a new trader is the fear of missing out. How many times have I sold the low or bought the high because I didn't want to miss the move? You're not going to miss the move if you're not in it, right? Don't worry, it will come back. It will eventually give you a reliable opportunity. So in a bullish market, when we're right smack at the highs like this, I don't want to be a buyer. What I want to do is I want to look at areas of support waiting below, right, and look for a correction. We're usually going to get a two-legged correction. You'll hear me talk about that quite a bit today.